Good morning. I'm Daniel Dobbs at danieldobbs.org. I'll be your host for today's webinar that I've produced and written. I've been a mortgage broker for 38 years. I began my blogging journey in 2008, and thank you all for reading and for all the positive feedback. For those who don't know me yet, just visit my website at danieldobbs.org. My bio is on the homepage. All of the content on my site is available to share for your blog or website. Just send me a request. I'll send you a copyright release, good for up to 1 year, if you're open to working with another lender. If you have questions at the end of the webinar, call me at 949-250-3981. I really do pick up the phone at all hours, and I'll address them at this time. Here is my Mutual Home website. For Facebook, feel free to share anything from our FB site. Nothing is copywritten, and most posts are targeted to agents who want to share timely posts from major media sources with their buyers and sellers. Here's my first tip. Do not use automatic generic postings for your Facebook account. Homeowners already know to clean out their gutters. That's FB spam. It's of little use, and I have a better source. Major media outlets publish what's happening here and now. Here's our Google review page. We also get high rankings in Yelp and Facebook. Please allow me 45 seconds of shameless self-promotion. Let me start by saying the blue highlighted text are links to my website or other authors that deem credible. I'm the broker of record for Mutual Home Mortgage in Brea, and we do loans throughout the state of California. Featured here are loan programs that we fund. The ones in blue are portfolio products that few other lenders offer. As always, I'll be using a lot of red in my slides. Approximately half of all my readers read on a cell phone or tablet. So to help agents focus on the main ideas on a small screen, I highlight key points in red. When you're ready to create a blog, I recommend you use a WordPress site. Everything is just so simple and will interface directly with my site, so why reinvent the wheel? Simple Text Services is owned by my web designer and good friend, Marianne Epstein.
There's a lot of great motivational speakers in our industry. I'm not one of them. I know that every lead is not a commission check waiting to happen, but only if you coulda, woulda, shoulda, sales managers will tell you, and they've got some kind of reasoning why you couldn't close the deal. That's bull. I'm a checklist and roadmap guy. It's just as important to ID the time wasters as it is to know who's a real lead. In our industry, you have to be able to do both and quickly. Today, I'll be speaking to you as a colleague, very bluntly, not how I talk to clients. No one works anywhere forever. You're only as valuable to your next broker as your client base is loyal. If you're making a broker change in 2019, the highlighted links are a must-read. You've got to protect your book of business when you leave your former company, and that includes past and present clients and leads. The moment an agent leaves a brokerage, someone, usually the MLO in-house loan rep, begins calling your past clients, asking them if they need to refi, need a HELOC, and oh, by the way, are you considering selling any time in the future? The reason the MLO initiates contact because your old broker doesn't want to tip off your clients that you've left for greener pastures. So never use a business card with an office address or your broker's corporate email address, even if you have to go print your own cards from an outside printer. Considering using an electronic business card in addition to paper cards. The electronic cards update as you do job changes. Here's an example. My forehead isn't that big. I just had to do that to fit the frame. Here's a tip if you're going to do serious blogging. Inman News, which is $1 a week for first-time subscribers, is the best bang for the buck. It's the insider source of information for agents. Just subscribe. You'll be glad you did. Blogging is easier than you think. You just follow the steps and look for content that's local for your community and any other specific audience. Remember a couple rules. It's not plagiarism if you give attribution to the current author, or in my case, you would have a release. The best time to blog? Sitting on an open house. Just use your phone as a hotspot. One thing I would caution you on both your blog and interacting with clients, stay away from politics, even if you think these people agree with you. My standard answer is, which is true, I don't care about politics. I only care about what the market tells me and what it puts into my bank account. Your blog is the online engine which powers your marketing plan. The blog by itself is a digital magazine. Here are some of the events you might publish. The content is about your readers, but the blog's presentation is you. Your blog will brand yourself. Use family photos, landmarks from the community, etc., etc. And timing your postings is very important for a successful blog. Here's what I've used just prior to the tax season. All of those are self-authored or by my CPA. Buyers, are they liars? Some are. Many just need coaching, and we're going to need a paycheck next year. Here are a list of articles to help you blog and market to renters. Here's also the buyer's formula that I've noticed over the years. It's a combination of several factors: motivation, timing, leases ending, credit, paid off a car, income, got a raise, got a gift from their parents. All of those factors equal we want a house now, which equals a commission check for us. Working with buyers is challenging. Morale is your most bankable asset, and poor morale hurts you, your family, and your career. Not all buyers qualify, just like all homes don't pass inspection or their appraisal. When a buyer's deal falls out of escrow, usually the deal was flawed from the start, then mistakes were made, and then it got worse from there as we all played catch up. And then it becomes a sleigh ride to Hades. I've been there. A little piece of us dies every time a 5-figure commission check goes away. And whether it's your fault, their fault, nobody's fault, the buyers probably should have never even made an offer, let alone gotten into escrow. If a deal blows up, always let your MLO deliver the bad news. You need future referrals, not be the bearer of bad news. And your MLO should always fall on their sword for their agents, because you are the referral source. That's why. By the way, if you do have to change lenders, the link on the screen titled Changing Lenders is specific to government loans, but it also applies to conventional loans as well. There are times when you have to change lenders, usually because the buyer has been less than truthful in their application. An underwriter gets uncomfortable with the file and then either outright declines it or suspends the file. Same result. Then the only issue becomes, does the first lender, who has the file currently, cooperate with the new one and give them the entire file so the new lender can go be the hero? Most of the time, the lender isn't very cooperative because of their sales manager always trying to make every deal, even when it's already dead at their sources. Mostly because their sales manager wants to keep loans in the pipeline because that's how they get paid and keep their small salary. Personally, I like peace and quiet over arguing, so I always hand over the file and may peace and goodwill follow them. In reality, it's goodbye, good riddance. The buyer shouldn't lie on their application. Working with buyers. Bloodhounds need a trail to follow. The bloodhound, just like in the movie, were born to hunt, but all dogs need an active partner. I get agents who call me and say, call this person. They want to buy a home. So what's their story, I ask. The reply, I don't know, just call. Don't get me wrong, I appreciate any and all referrals. The more information the agent gets before the MLO's first call, the better. If the bloodhound is to be successful in converting leads into commission money, they need a trail to follow. If the buyer is a time waster, we need to be able to compare notes on what the buyer has told us both. The questions on this frame is the bare minimum of what's really needed to make that first call from the MLO impactful. Is your buyer real? Where are they on the client timeline? Your MLO is the first to know. As the popular comic Jeff Foxworthy says, here's your sign. In this frame, particularly notice and focus on the posting, are your clients real or just using you? There's your sign. Are their objections real or just contrived to get more information or time out of you? Your MLO needs to protect you from these type of clients. And like the song, there's 50 ways to leave your lover. There are also 50 ways why loans blow up, and I've seen most of them. Several have happened to me. Credit rescoring is a game. I've seen thousands of credit reports. Most can be rescored to get the minimum lendable credit score of 580. Credit scores are the best indicators if and/or when a buyer can purchase. These posts are all good to use for your blog and all are self-authored. There's just so much canned information in the media that's repetitive, like, hey, pay your bills on time to get your scores up. Yeah, duh. But other information is just wrong. Please review FICO myths, for example. Information in this article only comes from an MLO having a 5-figure commission check and future referrals from the realtor and repeat business from the buyer, all writing on how well we rescore their credit. Credit rescoring of derogatory items require experience, patience, and a certain flair by the MLO for keeping a buyer's positive. It can be very tedious. It can be very depressing as buyers confront their own past. Credit rescoring is tedious. Featured here is an example of a credit report with an added feature for basic credit rescoring. It's in the second box. It gives us different options on how to raise credit scores by paying off specific debts. What it doesn't illustrate is how scores will go up if derogatory items or inquiries can be deleted. Please don't let your client pay for credit repair. It's a ripoff, and they do more damage than good. And please don't have them pay off old debt. I can take a look at a credit report and tell what needs to be done or if anything can be done at all. Closing costs, seller paid. Once we have the down payment nailed down, there is another challenge: where to get the closing costs. Other than their own money, there are 2 other solutions, each of which presents its own challenges. With seller paid closing costs, the foremost issue is, will the higher appraisal value cover the seller's bottom line asking price plus the higher appraised value of the closing cost? Another challenge for you, the buyer's agent, is demonstrating the buyer's offer is not solely contingent upon a seller paying closing costs. That's where your MLO comes in with their DU loan approval. We'll cover that detail in just a couple frames. In this frame, there is an article I wrote on getting the highest appraised value on your listing after I interviewed several appraisers. Lender paid closing costs. This is only an option if a buyer has enough income to take a higher interest rate and return take up to 3% in closing costs from the lender. By the way, banks, credit unions, and so-called mortgage brokers limit buyers typically to 1% because they know the buyer is going to refi as soon as rates drop, and they're trying to keep the loan in their portfolio. Whereas brokers, your buyers can get up to 3%. I won't bore you why that is in this presentation. So let's look at the math. Here's an example of 2 choices plus a third scenario of a future estimate of appreciation. All numbers are rounded off, but this frame clearly demonstrates for many buyers, lender-paid closing costs can get them into a home quicker with less money out of pocket. How many times have you heard a buyer say, we are just going to wait until we save more money? Well, if homes are appreciating faster than the buyers save money, they will remain renters. It's your MLO's job to do the math and point out the tax advantages of paying principal and interest and their property taxes, which are deductible. therefore lowering their net payment. One other point, the buyer should never pay points unless they have to qualify at a lower rate. These two examples are both 0 points. The first example is 5% with no closing costs. The second example is 5.5% with the $10,000 credit for closing costs. The dollar figures are featured in green ink. The rate of 5.5% with the buyer receiving $10,000 in closing costs only raises her payment slightly. And in conclusion, the buyer is ahead on the cost for 67 months. But the real kicker is their net profit from the appreciation of the home, which in 5.5 years, based on 3%, is approximately $90,000. With compounding interest, it's higher than that, but I just wanted to go with rounded figures. The rate game. There's no truth in advertising, there's no free money, there's no secret sources of lending, and in truth, APRs are the best benchmark for shopping rates. There are 9 factors in determining a rate. That will be in the next frame. The advertised rates, particularly on Realtor.com in my opinion, are a little bit on the lowball side because they only apply to the gold standard borrowers who have 740 FICO, 25% or more down, a 15-day rate lock, and there's probably other fine prints. One other thing, buyers can't get a legitimate full loan approval in just minutes. There's no out-of-this-world mortgages, if you catch my drift. Job changes, gaps, what's on that screen, all affect whether a buyer can qualify. And until a person goes through the file in depth, examining verifications of employment, etc., can they really say if your buyer is fully approved? That takes a while, usually about 3 hours. By the way, also, it's a myth agents must give out free lender referrals to buyers. All you're doing is giving up control over your deal. Find 2 good lenders who pre-DU file to team up with. Take control. Don't play commission roulette with your paycheck. Here are the 9 factors determining an interest rate. I'm going to go silent for about 10 seconds, 15 seconds, while you all take a look at this. Here's an explanation what a DU is. It's a computerized loan approval process which verifies buyers have completed their entire loan package, and when approved, is assigned a lending case number by Fannie, Freddie, or FHA, also VA. And it guarantees there's no real last-minute surprises before close of escrow. If your client has a minimal down and FICO scores in the 600, a DU loan approval is the only way to get the offer accepted. Just include it with the initial offer in the RPA. If buyers say they've been pre-approved from a lender you haven't worked with, react quickly by getting a copy of the pre-qual letter before you show more than a couple homes. If the buyer won't provide it, it's a sign they're just not that into you and probably aren't worth your time. Remember, buyers can be very evasive, and if you get a fraudster, life is going to be miserable and licenses can be put at risk. Fannie Mae says 1 buyer in 6 has significant misstatements in their loan package. With DU approvals, professionals take control. Pre-approval letters are virtually worthless. With the DU approval, agents can focus just on opening escrow and meeting timelines. Close of escrows are timely. The loan contingency periods are already met before inspection and appraisal fees are incurred. Offers are accepted more readily, which means less property showings by you, less time for buyers' anxiety. You avoid losing deals at the 11th hour. If a buyer only has a pre-qual letter, get a copy for your files ASAP. Just tell them it's your office policy. Explain the advantages of the DU, the seller's market. Hound their lender then. We need a DU, we need a DU, there's going to be competing offers. And then wait for an answer. It's going to be either we do, will do, or there will be reluctance or even possibly silence. Call centers versus agent relationships. There's a lot of good MLOs out there, but not in call centers. Most large lenders rely on call centers, staffed by hourly customer service employees, not licensed or seasoned MLOs. Lenders who rely on advertising budgets versus agent contacts forbid the agents and buyers and the sellers as a one-and-done deal. And fundamentally, you are. Purchase deals are much, much more tedious. Escrows close less often, only about a third of the time. And they take up more time versus refi. DUing a file takes about 3 hours to process before the buyer even finds a home. So most lenders are reluctant to go through the hoops. Usually call centers, easier and quicker files, usually refis, take priority. Bottom line, without a relationship with an MLO, the agent's deal just becomes another file on the customer services clerk's desk. As a referring agent, you have control. The clients will be less stressed, and you and the MLO will get referrals and repeat business. Here is an example of a full DU process where I've blacked out the most important information. Notice how you'll get buyer's name, maximum loan amounts, down payments, amount, loan type, and the interest rate. All right, let's move on to sellers. Blogging for sellers. First of all, you're going to start out by macro targeting. They're either going to be the cities, communities, your farm areas, et cetera, et cetera. Then we're going to micro-target your blog for either seniors, families, or groups, or all three. Here's several links why people shouldn't sell as FSBOs. If you're going to convert FSBOs to listings, you're going to need to do it face-to-face. A blog won't do it. In California, virtually no sane seller thinks they can sell their home on their own. It's really a message called, I want to sell for less, but of course they want full service, if they can get it. For those sellers, hand them a blank set of car forms and disclosures while patiently explaining the importance of each. Wait for their eyes to glaze over and then go into your sales pitch. Bowling Alone. This was a very long and dark read, but here's the gist of it. Community marketing wins. Anybody who would like this book is welcome to it. It's 340 pages of psychological studies. I will never pick that book up again. The book is a thesis documenting how the modern society, as individuals, have become alone in a vast ocean of activities. But with so many choices, it often leads to subsequent feelings of fear, isolation, detachment from their community and their neighbors. Those fears and isolation and depression is weighing heavily upon ourselves and is affecting the fabric of our society. It is definitely a dark read. One of the things it points out, we are over-messaged, and it starts out with the fill in the blank robocalls that we get 10 times a day. Communities, commutes, screen addictions, frustration, life issues, the news, it's crazy. Then someone knocks on your door and says, do you want to sell your home? Seriously? The book points out there is an opportunity for business people who engage in relationship marketing. People do business with those who have similar values and activities they share. A personal relationship doesn't guarantee a deal, but you'll be in first position to serve your friends, colleagues, or clients before other salespeople. There is a link on my site for community and relationship marketing. Serving kids, walking a dog, hosting a food drive is old school marketing, and that's not going away. Look for a community you believe in and then get involved. You already know what's worked. Then blog about the events, both before and after, and during. I hear Instagram is very good for that. Even I can't keep up with all the social media. Ask your 14-year-old son or granddaughter. They'll know. Your blog is the engine of your marketing machine. I can't say that enough. It's all about community sponsorship, small event marketing. We're coming down to the home stretch, so please stay with me. Here's a starter list of events and activities you can sponsor and interact with future clients while serving your community and enjoying your career. I'll pause for just a few seconds so you can review. And you have to think, what's the alternative? Door knocking? Really? So you're going to interrupt people from what they're doing in their family time? And then sales managers tell you, hey, you got to get 100 no's before you get a yes. It's not a marketing plan. It's a prescription for therapy and Xanax. Dropping off flyers and notepads, that's littering and probably prohibited by city regulations. Buying internet leads? Don't. Carr says so. Dialing for dollars. Are you kidding? Remember when a website and AdWords were the secret for an agent's marketing plan? Who got rich off that? Google and web text. I can show you a better alternative. And first of all, kudos to Coldwell Banker. There's no stress by meeting people at pet adoption events. Lots of opportunities for community and service. In this case, it's community marketing Adopt a Pet Week. Instead of door knocking, they'll be meeting potential clients here. These are 4 of the 6 Orange County locations. Coldwell Banker simply piggybacked on the National Pet Adoption Week. When they found pets for families, I'm sure they took a few photos on their phones with the families and the new pet. Then they sent the photos to the family with an electronic business card, all the while feeling good about their career and knowing they were making a difference in people's lives. This shirt is available on Amazon.com. It completely demonstrates what agents are up against. Agents have a tough time. So do MLOs. It's just a different challenge. The shirt says it all. So go out and find a community and event that you can support. Go green. Share a common cause. Maybe just go walking and talking with a neighbor. Sponsoring young entrepreneurs. I can't pass a lemonade stand personally without stopping and buying cookies and lemonade, even if I'm not that interested. It's good to reward these young entrepreneurs. Give back to those who protected us. You might just start by giving a hand up to a family or being a part of a cure. We're getting down to the last couple frames, so please stay with me. Buying and selling a home is a personal experience. It can't be done by AI, computers, or customer service reps. You as agents are ambassadors of and to your communities. Whether it's Megan's Law, Homes for Heroes, Prop 13, or Food Drive, the agent community is here for the long run. And let me tell you, when I watch all these startup companies, no whiz kid cut rate commission company will be around for long. Remember Help You Sell? Yeah, me neither. Relationship has changed venues, but it hasn't changed people. Clients do business and choose people who exhibit the same positive traits as they have. So go out, be a part of your community, find a need, and be useful to others. And remember, if you like your career, it's not work, it's just you.
My team and I would like to earn your buyer referrals. We bring unique skill sets to the table. I hope our skills were evident here today. If you're not working with another lender, call me. I really do pick up the phone at all hours. Let's talk how we can be successful together, and I'll provide you with enough web and blog content to get you started. If you liked our presentation today, can I make one request? Please like us or write a brief word for Mutual Home Mortgage on Facebook and/or Google. It makes a difference, and I will reciprocate by doing a personal consultation regarding your 2019 business plan. Also, I know your time is valuable. This market requires us to work harder and smarter. I hope the time we spent together today has been worthwhile. Thank you, and have a great rest of the day.